Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Friday, March 13th, and my name is Raleigh White, and I'm coming to you live from a beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics, beginning with his midday market analysis and his updated stock watch list. And then he's going to pivot. He's going to give us an introduction to seasonality and stealth surge trades. He's going to share with us how to identify and confirm a stealth surge trade. He's going to talk about the kinds of options to use with stealth surge trades and how we can use seasonality to help confirm A-line trades. Now, these A-line trades, we've been talking about those all this week. And then as a special bonus, folks, he wants to talk about debit spreads. He wants to talk about why they're good to use, when to use them, and in particularly on swing trades. So we've got a terrific agenda on tap for today. And if you've got questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also, folks, I've opened the chat room to everyone, and we do have some ground rules. Always be kind and supportive. Please, folks, keep to the topic, and also no political discussions allowed here whatsoever. And try to keep those side conversations between one or two of you to a minimum, because, folks, this is just not a general chat room. This is an area where we have all come to listen and to learn from what Roger's going to be sharing with us, because after all, he's here to give us an edge in the markets and to help us become much more confident and consistent in our trading activities. Now, if you were with us this morning at 8 o'clock Eastern Time for Roger's pre-market briefing, you'll note that there were several catalysts on tap that we needed to be aware of. On the tech front, we noticed that Adobe was coming into the market down 8%. On the retail front, Ulta was down 8%. As far as the energy sector was concerned, now crude was down 2% in overnight trading, and that was bringing down some of the energy-related stocks like Oxy and APA, which were down 1%. On the international front, we saw that the euro stocks were down just 0.2%, the Shanghai was down 0.8%, and the Nikkei was down 1.2%. So not much of a positive tailwind for us coming into the open from the international markets. Now, as far as the Fed is concerned, a busy day on reports. We had core price data coming out, preliminary GDP, durable goods, the JOLTS jobs report, and then preliminary consumer sentiment and inflation expectations. So a lot of information out here coming out, a bulk of it by 10 o'clock this morning and a little beyond that. Now, as far as catalysts are concerned, people are wondering, why do we focus on those? And from Roger's perspective, he likes to start with the big picture. In particularly, if information is known or will become known during the trading session, but it's not yet priced into the market, those are volatility flashpoints we need to be aware of. So if we're if we're considering, for example, taking a position in retail or tech or something along those lines, we might want to be aware of how that sector is performing before actually taking that position. Now, as far as his pre-market stock watch list is concerned, you'll note that he has 16 tickers on tap for us, the bulk of them on the short side. And we'll note that there were a couple that are underlined, Roblox, RBLX, and Qualcomm, QCOM. The reason they are underlined is that Roger, when he was talking about those two tickers, basically said, I really like these. I'm going to keep a sharp eye on those. And that's why I wanted to call those out to your attention. On the long side, he said, folks, I have scoured, and there's only four that I see at this point in time. COP is ConocoPhillips. And he said I could have put any number of tickers in here, ExxonMobil, Chevron Texaco, et cetera, but I'm picking ConocoPhillips at this point in time because energy stocks are doing well. And then that was followed by SO, Darden, and Kroger. So these are the 16 stocks that he's got his eye on. As you can see, the bulk to the short side, and particularly in the market environment that we're in. Now, one thing I need to share with you is that this is a watch list, and a watch list is literally what it is, something that Roger is keeping his eye on. It is not automatic that he's going to place trades on any of these tickers. But if any of these tickers do meet his qualifications, okay, for what he's looking for, more than likely he will take that trade and he'll share that information in his trading pit or in any of his other premium alert services. Now, as far as Roger's pre-open thoughts were concerned, once again, we noted as we came in this morning that the futures indices were all moving higher into the open, okay? Which was nice to see. Now, we also noted that the put call ratio was balanced. Yesterday, it was heavily favoring the puts, and now it's moving back down in the call position. But that VIX was remaining stubbornly higher above 25. Roger's level is 20. Anything above 20 means there's concern in the markets. And we're at 25 at this point in time, and we're hoping it's going to come down, but that's where it was. As far as the sectors are concerned, over the past couple of days, they were rotating more towards speculative stocks, but this morning, no, the top two were energy and utilities, much more defensive stocks at that point in time. We also noted that the SPY, the QQQ, the CHIPS, SMH, and the MAGs were all basically sideways, consolidating down in their range. And as far as momentum was concerned, we noted that there were 690 companies below the 20-day average. And that's really a pretty big number. And what Rogers says, typically, when that number gets above 450 into 500, typically you're going to see a reversal in that number. But that's where we were coming into the open. And he also pointed out that the only place where we're actually seeing any positive momentum is with energy stocks and energy related stocks. So they're the only upward drivers. Now, he also pointed out something that I thought was interesting. Fundamentals, specifically the war in the Middle East, is what's driving the bus at this point in time, and technicals not so much. So you know Roger is a technician. Fundamentally, he is a technician, the way he looks at things. But those technical indicators and things that he looked at, they can be trumped by fundamental moves that you see, like, there could be a news event that says that something was bombed or this, that, and the other thing. And then that's having a direct impact on crude oil prices and on the VIX. And that's what's moving the market, regardless of what the technicals are saying. So bottom line from his perspective, be careful today, folks. It's Friday. Friday morning before 10 o'clock, really don't do anything because we have to wait for reports to come out. And typically, Friday afternoons are not good times to trade either because there's a lot of volatility and bleed off in the markets. Okay. And then lastly, he said, when you take positions, don't take large positions. Don't take your normal position because the VIX volatility at this point in time will make up the difference. And he had a great session on that yesterday where he was talking about when volatility is high, you don't have to have the same amount of positions to achieve the same amount of return. So I thought this was great information, and I'm looking forward to Roger's midday update as to what's going on in the markets. And to that point, folks, here's the agenda. Roger's going to begin with that midday market analysis, and he's going to give us his updated watch list. He's then going to introduce us to seasonality and stealth surge trades. He's going to talk about how to identify and to confirm a stealth surge trade and what options to use with stealth surge trades. And then he's going to talk about how seasonality can help confirm A-line trades. The past few days we've been talking about A-line trades. Well, seasonality plays a role, so he wants to kind of close the loop on that. And then finally, folks, as a special bonus, he wants to talk about debit spreads, what they are, how to use them, and when to use them, and why that can be an important part of your trading arsenal. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we will address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember, I have opened the chat to everyone, okay? But we do have some ground rules. Please be kind and supportive in your comments. Also, Try to keep to the topic and no political discussions whatsoever. And try to keep that chit chat between one or two of you to a minimum because, folks, this is not a general chat room. This is a room where we have all come to listen and learn from the information that Roger's going to be sharing. Because, after all, he's here to give us an edge in the markets and to help us become much more confident and consistent in our trading activities. So, folks, with that, let's say hi to Matt. Let's say hi to Roger. Hey, guys. Wow, what a morning, huh? I
Very
mean,
interesting morning.
very interesting. Interested in your thoughts there, Roger, because I thought you pretty much pegged things, but the thing I remember most is your statement about fundamentals, parentheses, the war.
The war. The
That is
war.
what's driving the bus at this point in
Yes.
time. And
Yes.
that's we got to let that sink in for a minute.
Yes. Yes. It's very, very and again, it's not a cop out or anything like that, but
No.
it's that um acts of God and acts of war are superseding acts that intervene within market price action. It's always been that way. For example, and I mean this is just common sense, but for example, um, when you guys see a price action and you see a stock, look at any stock on a 5 minute chart, right? And let's say it's moving up, any stock you want. I don't care what sector, what industry is in, okay? And our president comes out, and again, this is not political. I'm trying to illustrate a point. Don't get hung up on president. It doesn't have to be president. The head of I don't know. Somebody comes out and says, this we're gearing up for another round of fighting over the next 3 months. I don't know. If the stock market starts falling down, your stock will stop going up. It's just the way it is. And a lot of it has to do with algos. You see, the algos that are programmed to buy your stock, they have enough artificial intelligence to understand headlines. They're not smart enough to really differentiate if it's a new headline or not, but they are designed to read headlines. And when that news comes out and the SPY starts selling off, momentum starts going down.
Hmm.
Okay, so it's not something we can control. It's just the way it is. We saw this. Um, we saw this. In the last 24 hours, you were so correct. Closing B. You're welcome, Adam. I'm gonna close the chat. I don't want to get in trouble. I want to stay on topic because I do have a lot to say today, and I will answer all of your questions later. I promise you.
Hmm.
I'm not going anywhere. I don't have any major agenda here. Um, so you've seen it. You saw it when Trump just got elected, and he was negotiating, quote unquote, with other countries on tariffs. You could have had the most beautiful move in a stock, and he would say something. Amazon was really on fire back then, and it would just come off. It's not because of the stock. It's just there are certain things that markets need to appraise in their value, and when news like that comes out, they have an opportunity to appraise that into their price immediately. And when that happens, um, all hell breaks loose. The good news is these short-term news events, they usually don't last very long. And usually the trend, unless the trend impacts that stock in that industry, the stock will revert to whatever it was doing before the news came out. So again, I'm just explaining to you guys, we can't, you know, the market gives you information. What we do with that information is up to us, not the market. And I've been telling everybody for the last few weeks, lower your position size, lower your exposure. Don't trade as big. Yesterday, I explained to you that volatility will make up for your lack of shares. You don't have to have, when volatility is like this, you have 10 shares. When volatility is like this, you don't need 10 shares. You need 5 shares.
That was
Okay.
pretty eye-opening, by the way, Roger. That was an
Thank you.
eye-opening session. Yep.
Yeah, a lot of people don't think that way. I gave you adjustments yesterday, and I gave you a little doc too to show you. I'll give you a really good example of how you should size your positions so they equalize. So they are equalized. So they're not. Um, they're not. You're not lopsided. And by the way, everything I explained to you yesterday about equalizing your position, that works really, really well with large caps and options, but it doesn't work really well with small caps. There's a very specific way of doing it with small caps. Excuse me, got cat hair all over me. Um, and I will be I'm going to do a special session next week here for small caps. Okay. And I'm going to explain and show you. And we're actually right now finishing up the document for all the trades in high flyers using that approach because it's a very different approach. You don't trade small caps uh, you don't adjust risk the same way on small caps because there's no volatility adjustment. You have to use your loss adjustment, and I'll talk about that. And I'll explain to you why we do that on small caps. There's a reason why, but small caps are so what I explained yesterday, you could use it on small caps, but there's a better way on small caps. What I'm trying to say is you could do it, no problem. You won't get in trouble. You'll be fine actually. But especially if the stocks have a lot of variance, like a 50-cent stock versus a $4 stock, you could do that. You could do it the way I explained yesterday. That's fine. But there's a better way. There's a much better way. And I'm going to explain it to you. And I'm going to explain it to you guys sometimes next week. I have to just figure out a time. And I'm going to actually invite a couple of our copywriters who help me with that program so they could see exactly why I do what I do. So we're not just going to have you guys here. We're also going to have some folks from the pub here as well, taking notes and watching this. And oftentimes, believe it or not, we do have folks who actually work with us come into the show and learn as just like you guys do, which is really, really great. Now, let me go ahead and share my screen. I want to share my screen. Here we go. Okay. So as of right now, just to show you where we're at right now, as of right now, you've got 439 stocks breaking down. Okay. This morning, when we came into the day, we had 690 stocks.
I know, it was massive.
Yeah. We're at 439, but the market is actually lower. You could see it right here. Here's the SPY. SPY's breaking down. I think the SPY wants to kiss the 200. I really do.
Yeah, you mentioned that this morning. Yep.
Yeah. I think. I mean, I don't know what it's going to do, but I think it does. We still haven't broken this high volume candle. There's a lot of support right here because you do have a high volume candle here, and you have some support right here, both of these areas. And we're kind of, you can see we're kind of in the middle of those areas right now. We're just kind of sitting right there. But we are lower today. So why do we have less stocks breaking down if the market's lower today? Because market capitalization. The market capitalization was higher on the stocks breaking down. That's why I like to use this, because this gives us a number and it's not based on capitalization. So even though the market is lower right now, there's less stocks breaking down. And I want to see what this number looks like at the end of the day today. If it comes back close to 690, I'm going to expect a bounce. If it closes close to 430 or even 300, then I'm going to think a bounce is already on the way. And again, it's very important for us to review right now, folks, because I don't want you kind of need to know context right now. It's very important. So you could see volatility is above this level. That's very, very dangerous because it's not a panic. It's a slow movement, which means volatility is slowly increasing. And that's very, very, very dangerous. Okay. That's very dangerous. And I'll explain to you why. Okay. I'm gonna get a little disgusting here, but trust me, it's important. Okay. You guys, most of you have watched Law and Order and, criminal shows, right? Mm-hmm. So, like, let's say somebody's on trial for killing their wife, okay, or husband, I don't care, or dog, whatever it is you want, not their dog, the husband or wife. And, it's always the husband or the wife, right? It's never anyone else. It's always the husband or the wife. Like 99, if your husband or wife dies, God forbid, the cops are going to think 99.9%. It's just a default. It's okay. Husband, yep. They don't even look at anybody else. They just, it's obvious, unless there's a serial killer in town, it's your husband or wife. You know that throw mama from the train, that where I love that because that's like the only way to get at my wife and I, God bless her, we watch a lot of Law and Order. Okay, that's her favorite show, so she's addicted to Law. If I tell her to watch Law and Order, even if she watched 50 episodes, she'll be like, okay, let's watch Law and Order. So it's always the default show at my house. So and Dateline in 2020, which by the way is the same thing, just the version before it comes out uh, um, on CSI or whatever that the crime
Law and
shows.
Order.
Law and Order. Yeah, thank you. So here's and I think you guys will understand this point. I think it'll be interesting when I tell you. So there's a big difference between a manslaughter and premeditation, right? Right? Premeditation, you buy
It's
the
first
rope,
degree. Yeah.
you're scheming, you're planning, there's planning involved, right? You're not in the heat of passion, you're not in the heat of the moment, okay? And manslaughter, you're in the heat of the moment. You're just, you saw your wife with another man, you lost your cool, you killed him, and you're like, oh my God, what did I do? I'm not like this. This is not me. So if you kill somebody and it's premeditated, you get life or you get 25 to life. But if you kill somebody and it's manslaughter, you can actually get out in like 7, 10 years, depending on what state you're in. Now, what the hell does that have to do with what I'm talking about right now? Let me explain. You see right here, this bar, this is manslaughter right here. This is emotions running wild. Okay. That's not sustainable. That's not sustainable. This cools off, and oh, what did I do? How did we get here? I saw red for a minute. I'm a good guy. Don't put me away for life. This is premeditated. See how it's going higher slowly? That's premeditated. That means business. So usually when we see volatility increase, we see this. Because the truth of the matter is 99.9% of the time volatility increase, it's something that's panicky, that's happening, that we don't know how it's going to be resolved. It's one of those things that's something really, really unforeseeable, and then panic. This is a panic indicator, right? But volatility is right now at 28 and it's moving up slowly. That's meaningful. That's dangerous. That's really, really dangerous. You guys understand? This is meaningless. This is the guy who blanks out and kills somebody and then he never commits a crime again in his life. There's thought behind this. Did I give a good analogy, Raleigh?
It was a great analogy.
I wanted to make
I
sure.
was wondering how you were going to bring all this together. Yeah.
I know. I thought it through before I figured I was going to use that analogy today. I thought it through. So you see, this is the guy losing his mind for 5 minutes. This is meaningful. This you got to pay attention to. That's small bars, volatility going up. That's a real move. And again, I'm not trying to scare you. I'm not trying to tell you what's going to happen next. I'm just trying to be real with you. Okay. Okay. And on that note, if we go back, let's just take a look at crude oil right now and see what crude oil's doing.
Spiking.
I'm sorry?
It's spiking.
Yeah. Oh, yeah. Exactly. And it's doing exactly the same thing. Again, see this right here? Notice that volatility. Here, let me just. I know that I keep talking about the same thing every day, but if you guys knew the relevance of this to what's going on in the world, you would understand. It's literally all your answers to all of your questions about everything are in these two charts right now. And I'd love to make it more complicated and I'd love to make it more advanced, but I'm being really real with you. This is measuring these two right now. And notice, by the way, notice how they both look exactly the same on the chart. Look at that. Right, Raleigh?
Yeah. It's amazing.
Think about this.
They're mirror
Crude
images
oil.
of one another. Yep.
Crude oil. And think about this. This is crude oil. This is volatility on the S&P 500. Technically, they have zero relationship with each other. You guys realize that, right? They have no relationship with one another. But right now, in this moment in time, because of the war, they've become best friends. They've become extremely intimately connected. And you could be watching the news 24/7. Nothing will give you a better indication of what's happening in the world than these two charts. I'm going to post them for you, okay? I hope you don't mind, Raleigh. I'm just going to post it in the chat.
Please
It's my
do.
First time opening the chat today. Here's that, and here's that. You may have to adjust them to candlestick charts, but that's pretty much it. I'm telling you, folks. I know I'm oversimplifying it, but I'm telling you, really, this is what it really comes down to. And I wouldn't be telling this to you unless I was really confident in what I'm saying. Okay. Yeah, exactly, Ken. The news driving it. All right, I'm going to close the chat. But yes, they are. They have become. They are not related in any way. They are, as a matter of fact, I don't even know what the correlation between energy and SPY is. I've never measured it, but they're not correlated. But right now, they're like this.
Yeah, oil's the dog. It's not the tail.
Right.
That's the way
Right.
I look
It's
at it.
circumstances have brought them together on an island and put them together like what's his name in the bowling and the ball Tom Hanks in that ball on the island.
Wilson.
Wilson?
Wilson, thank you, Wilson. I did see that movie a long time ago. It was great.
Wow. Yep.
But this is Wilson and this is Tom Hanks. Okay, I mean, I'm telling you right now, this is all that matters. I know I'm kind of dumbifying it a little bit, but I'm telling you, this is really where the money is right now. And then this is kind of giving us the backdrop answer to all of it. Again, when I was looking for stocks today, and I'm going to start off by giving you some stocks because I do want to show you some stocks. I just wanted you guys to see this with yourself. And again, when I tell you something, you're like, yeah. But when I show it to you, it takes on a meaning on its own. Now, you'll notice in a few minutes that every stock that's not a energy stock, it will be on my watch list, which we will do in a minute. But I just want to show you now there's 31 stocks making 1-year high right now. Usually the number's at about 100. Okay, at about 100. Energy, chips, not energy. Energy. Utilities, energy or utilities. Okay. This is fertilizer kind of stuff, like CF kind of a company. Utilities, natural gas, energies, supermarket, energy, biotech, not really looking great. Energy, and energy. I think you guys have seen the point that I'm making here. They're all energy stocks. And the ones that are not energy stocks, you will find, I'm about to do my list. Point is, we are in a position right now where, aside from the few stocks that I'm going to give you, most of the stocks that are moving are energy stocks, okay, to the upside. Downside, that's not the case, which is not something I want to be saying. But like, I've got like Meta and Shopify on my short list here, okay, which is not good, So my short list is very, very fruitful. And like, for example, look at this: GTLB, CTS, bank stocks, tech stocks, Bitcoin stocks, infotech stock, tractor supply company stock, retailer, consumer staples, web hosting, fitness company, healthcare. You see what I'm saying? There's plenty of them, and they look
more
great.
Diversified to the short side.
Yes. We're not having that to the upside. So, well, Roger, why don't you just trade energy stocks? Well, that's great, but the problem is with energy stocks is they're completely news driven right now. So we could make a lot of money, but we can also lose a lot of money. Remember, I'm a technical trader. I'm not a news trader. I don't know what will happen next, and I don't pretend to, and nobody does. But a lot of people pretend to, but nobody really does. Nobody knows what will happen next. But my point, and you don't have to, but my point is, technicals, trading energy stocks at alongside, we're taking a big chance right now. Because, for example, and I'm making this up as I'm going along, if, for example, our president comes out on Sunday morning and says, hey, we just agreed to some cockamamie, deal with Iran where they've agreed to hand over everything, we're done. Energy prices are going to go down 20% and you're going to be left holding a bag. I don't want to be in that position. And I don't want you guys to be in that position. Okay. And I'm being real with you. Okay. And I'm being honest with you. All right. And I'm not trying to sugarcoat anything. So we have to be extra cautious right now. I know I'm spending
So,
a lot of time on this,
yeah,
but it's important.
no, it is important. And it brings up a question. And I thought Kevin did a great job of coalescing what a lot of people have been saying here. So they're going like, so Roger, how do we get an edge in the market like this when things could change so quickly?
It's very hard. It's very, very hard. And sometimes you don't have an edge in the market. Sometimes you don't have an edge, or your edge is very, very small. And that's when you have to walk away. Sometimes you go to Las Vegas. Let's say you're a professional gambler. Sometimes, and you go to Las Vegas and you go to the table, and there's two 20-year-old girls just sitting there who have no idea how to play poker, and they're just messing around doing all this stuff, and you're like, I can't play here. There's no edge here. They're ruining my edge. And I've known people who have done that before. Sometimes we don't have an edge, or sometimes we have an edge to the downside. For example,
Hmm.
stocks that have been going down before the war, that have been going down before the
It's a
war,
good point. Yep.
stocks that have no correlation to the war. Good luck with that right now. But there's still something there, but it makes it harder, which means you have to lower your exposure, you have to lower your position size, you have to be defensive, and you have to be extra careful. Like I've been in the last 2 weeks. Think about, folks, how many trades have I given in the pit in the last 2 weeks? I can probably count them on one hand. I usually do 1 to 2 trades a day because of the environment right now. And if you're one of those folks, no, I need to trade. My guru says that there's going to be 2 trades a week no matter what. They're just making stuff up as they're going. Remember, the market is a living, breathing mechanism. It has good days, it has bad days, it gets grumpy days, all of that stuff. And I hope you guys understand the importance of what I'm saying right now and the relevancy of what I'm saying right now. All right. I'm not going to BS you and give you some nonsense. I'm just not going
No,
to do that.
no.
Okay. So I wanted to show you, like using my watch list, showing you how there's not much there right now. Now, let me give you my watch list, and then I want to get into the training session. I do have a lot to talk to you guys about. Here, get my, let me get my screen here. Okay, here we go. All right. All right. I'm going to do the short side first, okay? And you'll notice a lot of the stocks that I mentioned on this list. GTLB, short side. Now, let me ask you a question. This stock right here, what has this stock been doing long before this war started? It's been going down. That's what I'm talking about, okay? What has this stock been doing? It was going down, and now it only increased its down pressure into the war. It's a bearish play right there. ZTS. Choppy, coming down. And this is a healthcare stock, drug manufacturing. Planet Fitness. I mean, what has the stock been doing all since December when people join gyms the most,
I know.
right? It's
Those
been
are all the
going down.
cancellations.
A lot of cancellations. It's been going
Yeah.
down. It's been going down. It didn't suddenly start going down. It's been
Mhm.
going down. BR, that's right, Cyrus. BR, I'm going to close the chat here. Here, 1 second here. Okay. BRKR. Same thing. The stock has been going down for a long time. Okay. GPC. Look at this stock. Do you think the war has done anything to this stock?
Mhm.
I don't think so. It's another good short. Meta. But told you I had this on my watch list today. Breaking out after consolidating for a while. Look, you got a head, you got 2 shoulders, you got your neckline right here. Okay, just FYI. Shopify. I like Meta better. It's a little flatter. This looks like it could still pull up a little bit. I would wait for a deeper pull down on this one. That's my short list. Now, let me give you my long list, and you will notice,
Roger, quick question. What was the first one on your short list before FSA?
GTLB.
GTL?
GTLB. Yeah,
Okay, yeah,
GitLab, GTLB.
thank you.
And the second one was FSK. Okay. All right. Long list now. Philip Morris, Altria. Look at where our entry is. Right there. It's actually a nice look right here. Okay. Let me make a little note of that. Okay. NBIS. Nice breakout. Got a doji sandwich here. Look at that. You got a doji sandwich. You like that, Matt? Doji sandwich.
Mhm.
Doji sandwich. WDC. This stock is not actually, hold on a second. Let me delete this. No, I erased this. Erase WDC. Forget the stock. Forget the stock. It doesn't look good at all. Micron. Yeah, Micron is an A line here. And it's got a nice bar too. Micron is on my list, yeah. Fang. This is the only energy stock on my list because it's got a nice A line right here. Nice A line right there. Johnson Johnson is back on my list. I need to see a confirmation. I need to see it close above right here. So somewhere above 245. AEE. That's a nice A line right here. Look. See that right here? Nice A line right there. And KR. Whoops, KR. Those were the only stocks that I found. And there, how many we got there? 1, 2, 3, 4, 5, 6, 7 stocks. Those are the only 7 stocks that I found on my list that I really, really liked. Those are the only 7 stocks. I usually have no problem giving you 15 longs. So we got to be really, really careful here. All right. Do we have any questions?
No, I think once again there was that. Yeah, I think you basically covered everything, Roger. There, once again, I just think people are they're just absorbing what you're saying, and from
Okay.
this perspective, I think the advice and this hard for people to hear this advice. The advice is be patient or sit on your hands. In this environment,
And lower
win
your
the fight
position
and
size.
you lower your position, keep your powder dry, any number, any number of things.
Yes.
But that being said, I thought you made a very cogent point, which was if you look at the shorts, and Roger, I'm just going to quote you: "Don't look at where the price is, look at how it got there." And the
Yes.
shorts that you indicated at this point in time, these were good shorts, war or no war.
Exactly. Exactly. I want a stock that's been going down way before the war, not as a result of the war, you see? Because if it's going down as a result of the war, what if the war's over tomorrow? See what I mean? I want just the crappy companies that are still going to be crappy companies, or good companies that are, although that's not easy right now. I'm not finding anything that great. It's hard to find a really nice stock. I mean, the only stock that I really like, and surprised was actually, you know what? What's weird? I didn't have it on my watch list. I just realized that was Verizon. Sorry, let me add one more.
Oh,
For some reason, I missed the best one, Verizon. This is the only stock that I really love right now, Verizon.
and it's long. Yeah.
Yeah, yeah, but otherwise, and another stock that I really like right now, but I already gave it to folks today as a bonus, and I gave it to them in A line is Enphase. I like Enphase quite a bit. I'm not going to tell you right now what option we gave you, but I like Enphase right now.
Yeah, exactly. And iPhone saying, how about energy long? Well, I think Roger just covered that. What's driving energy at this point in time is news and oil prices. And theoretically, that could change tomorrow.
Yeah.
some kind of a ceasefire could be announced or whatnot, and you'd see a 20% reduction. So it's highly correlated. You're way overexposed. So
Yes,
just great advice.
absolutely. Yeah, yeah, yeah. This is not a time to be a hero, folks. This is not a time to be a hero. There are times to be a hero. This is not the time to be a hero. Okay. Okay. Now, I want to talk a little bit about. Let me teach you guys some goodies. Okay. Now, yesterday I talked about the A line and I talked about confirmations and all that. And today I'm going to talk about. I want to talk about seasonality, and I'm going to explain to you how sometimes seasonality can help you make decisions. Okay. And seasonality, remember, seasonality doesn't know that it's war or no war or anything like that. So just be mindful of that. So right now, so let me tell you a real quick story about seasonality, okay? Seasonality is like adding wind, tailwind into what you do. Imagine you want to go swimming, okay? And you've got wind going into your face and it's cold water, you're not going to swim. But if the seasonality is good, you're going to go into the water, okay? So seasonality is not going to prevent you from swimming. It's just going to make it more uncomfortable. And obviously, when you're trading, like when you're swimming, you want to have as much wind on your back. You want to have everything moving in your advantage, okay? So usually, when people think seasonality, they think about the commodities market, right? They think about how um, for example, orange juice, right? Every year you have hurricane season, and every year during hurricane season, oranges get screwed up. There's always something with orange juice. How about cotton during winters? I know that I know there's a lot of cotton growing in Texas, and I know that every time you have droughts, it has a big impact, or really bad rain, it has an impact on cotton. So traditionally, there's always been very strong seasonality related to the commodities market. But if you think about it, and I don't want you guys to think very long and hard, because let me give you a really good scenario that you won't be able to ever forget. How about energies on energy prices and energy stocks on the rest of the world? Do you guys think? Do you guys think that what's happening right now with energy prices is having an impact on any of us? Gee, let's think. What kind of an impact is it having on the stock market? What kind of impact is it having on travel stocks right now? How about airlines? Have you guys seen jets lately? This is jets. That's the airlines. Gee, I wonder why. So I just proved to you that seasonality doesn't just have impact on commodities, does it? It has an impact on stocks too. All stocks. Let me give you some examples. And by the way, the examples I'm about to choose from, this is something our copywriter posted for me once. And when he did, it really drove the point home, because I never really thought about it that deep. But you're right, Cyrus. Everything is impacted by energy. It's very true. But think about this for a second, right? When do people buy cold medicines? Right? Do you see people running to the store buying cold medicines in July? No. Maybe allergy medicines, but cold medicines, flu medicine. When are all the flu commercials on TV? Winter.
Winter.
Winter. When do people do holiday shopping? In the winter. When do people buy Canada Goose jackets for skiing? They certainly don't do it in August. Winter, right? It's just certain most stores. Stores have buyers, right? These buyers will buy Christmas stuff before Christmas and summer stuff before summer. Like, I was in Fort Lauderdale a few months back, and they already, like, this was like beginning of end of January, beginning of February, I think, and they already were getting ready for the spring. I mean, it is Fort Lauderdale, but the
Yeah.
point is, how about pool supplies? Do you see people going to Ace Hardware and saying, "Hey, I need chlorine for my pool when it's like 20 degrees below zero, right? People, the guy at Ace Hardware is going to look at him like he's out of his mind, right? Right? How about Campbell's soup? When do people buy soups? Do you see people eating soup in the summer? No, in the winter. I think I've done a good enough point of illustrating to you. There is crazy seasonality in stocks, crazy seasonality, just like commodities, if you just know where to look. So what we've done is we took a a trading program based on technical analysis, and we applied seasonality to it. Okay. So, for example, let me give you a little taste, and I'll be giving you a lot of taste. You better get your pen and pencil ready because I have a lot of stuff for you today. So, let me show you guys something. I'm going to give you some freebies right now. So, tell me if this is useful to you. Okay. This is a seasonality chart for 3 utility stocks. This is the seasonality for utilities for the next 2 weeks. Okay. 2 weeks, right, Matt? 10 days, right? Yeah, 10 days right here. For starting today or Monday or
Today at the close. So
today at the
really
close.
Monday.
Between say repeat that. Repeat what you just said.
You're buying today on the close. So really it's Monday.
Okay.
Right? Because you're taking the closing price.
Right. So in principle, this is from Monday open for the next week and a half, 2 weeks. Okay. And I usually use 10-day seasonality for swing trades and 5-day seasonality for scalps and day trades. Okay. But now look at this for a second. This is XLU. This is the index. This has about 30 utility stocks. Over the next 2 weeks, over the last 19 years, it has gone up 68% of the time, a good amount, a profit factor of 3, which means if you bet $1, you would lose $1 for every $3.06 you would make. How about ticker SO? That's like the biggest utility stock. 84% win rate over the last 26 years buying utilities for the next 2 weeks. How about SRE? The last 26 years, win rate of almost 85%. That means like 22 out of 26 years it made money.
In
Not
this
just
2-week time frame, right, Raj?
Yeah, between now and what's today's date? Today is between
13th?
now and the end of the month. For the second half of this month.
Okay.
This is real. This is red meat. I'm giving you red meat. This is not hypotheticals. This is I asked Matt to generate this morning for me. This is him giving it to me at 9:54. Okay, this is us just having our chat here. I don't think anybody really cares about our chats, but here you could see it right here. Right here. You could see it right here. This is for the next 2 weeks. So let me ask you an interesting question. What if you have a really nice technical chart pattern on one of these stocks and you have this seasonality? That's a double whammy right there.
Sure
As
is.
a matter of fact, let's take a quick look at these stocks. So XLU. Whoa. That's an A line. So that's an A line with seasonality. And I mean, you got a nice A line right here. And by the way, in theory, and again, I don't use a lot of theory, but in theory, if this war continues over the next 2 weeks, utilities should be elevated, considering they're right now making 52-week highs. That's right here. Any price above this level, no bag holders for any of these buyers as a whole. Right here, above 46.87. Let's look at the other 2 stocks. How about SO? Hey, that's a stock I wouldn't mind buying. Now, this stock over the last 26 years for the next 2 weeks makes money 85% of the time.
Man, look at that profit factor.
Yeah, that means for every dollar you risked, you would make $23.93.
93 cents.
I would
That's
take this
insane.
trade. I would take this trade like 24/7, you know? That's a.
Any
I
of
mean,
them. Three. Yeah.
think about it. You could lose a couple of times and you're still doing good because you got look at your profit factor. Or how about this one? Let's do SRE. Let's take a look at SRE. Hey, that's an A line right there. Right there. So don't you think it's kind of interesting, Raleigh, that over the next 2 weeks, the utility sector, which happens to be the only sector aside from energy stocks, is showing crazy seasonality? Isn't that interesting? Not
It's
technology,
no.
not healthcare, but utilities. The
Right.
sector that now that's pretty impressive. That's pretty impressive, folks. Now,
And it's a story that's not told with fundamentals or with technical indicators.
no, no. So here's the other side of the coin. Let's say you're a trader, and let's say that you think you know how to trade, right? And you find a stock that you think looks good to the short side. And then and it's a utility stock. And I'm pretty sure I could find a crappy utility stock. There's always a crappy utility stock somewhere. Right? I mean, there has to be one. Now, and then I say, hey, whoa, 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 whoa. Slow your horses. Before you go short that utility stock, we have a very strong seasonal period for the next 2 weeks, going back 26 years. That's like you going to a party every year and getting lucky at that party 85% of the time. I promise each and every one of you, if that happened to you, you would continue going to those parties. You would never stop. That's a very high win rate. That means you get lucky out of 17 times out of 20. That's pretty good. Notice I said getting lucky. I didn't describe because getting lucky means different things to different people.
That's true.
So whatever that means to you,
Whatever your
whatever that
definition
means
of
to you,
lucky is. Yeah.
whatever getting lucky means to you. But that's you go to a party, the same party at someone's house for 26 years, or you go to the same bar, and you had out of 26 years, 22 of those years, you had a great time. Right?
Mm-hmm.
Let's put it this way. If I was thinking of going short, I wouldn't be going short utilities. As a matter of fact, not that I was planning on going short utilities, but after seeing this, I'm not going to even think about going short utilities for the next 2 weeks. So how important is this? How important is this? Let me explain to you how important this is. And I use the exact same example every time because it's such a good example. Have you ever had a Bloody Mary without salt and pepper? Ugh, right?
It ain't a Bloody Mary.
It ain't a Bloody Mary.
Yep.
Have you ever had a Bloody Mary that's warm? Oh, God. It's disgusting. Right? And I haven't drank alcohol in 13 years. I'm doing this based on memory. Or how about a Bloody Mary with no tomato juice? It's not a Bloody Mary. So my point is, you'll still get drunk, right? You'll still taste something, but it's not going to be the same, right? That's how seasonality works. It gives you that woomph. It gives you that tailwind. It's like taking a $500,000 boat. Well, $5 million boat. Now, you can't buy a boat for $500,000 these days. It's like taking a $5 million boat into the ocean, a sailboat, and having no wind.
Having no wind.
You're not gonna drown. You could still have a good time, but you're not really gonna, really get to use that boat. So this is very, very important. Very, very important. And by the way, I just gave you 3 red meat stocks that all have really good technicals.
And we're entering this window at this point in time.
Yeah. Would you guys like me to show you how I pick options for these stocks?
Yeah. One quick thing I need to share with you, Roger.
Yeah.
I'm laughing over Ken's comment. Ken's definition of lucky is walking into a room and remembering why he walked in there.
That's a good point, Ken. Thank God for small favors.
Yes.
Thank God for small favors, Ken. Thank God for listen. I get it. I get it.
So, yes, how do you choose options for these?
All right. So let's stick with let's see which one we want to stick with. They're all pretty SO. How about SO? SO is really clean looking stock. Let's look at options, okay? All right. So again, I want you guys to get the whole scoop. And by the way I'm going to show you how I do options here is exactly how I would do options for any one of my other swing trading programs. Basically, A-line, quick strike, gap to green, stealth surge, all those, what I'm teaching you right now. Okay. It looks like we're having a nice session for a Friday.
Absolutely, Roger. Great
All right.
feedback.
Yeah, good. I'm glad to hear that. I'm going to go ahead and close the chat. I opened up the chat to see Ken's comment. I'm going to close it again. So let's look at options. So let's see. Are the options reasonable here? They're pretty wide. They get better here. They're not too good. All right, here we go. There's something we can work with these options. Yeah, you can. So I'd go about 35 or 42 days out. I would go and start with a delta of, let's go 35 days out, 42 days out. Here we go. I would do a delta of 69 right here, 69 or 70 right here, somewhere in this ballpark. Well, Roger, what if you want to do a debit spread? Okay, let's talk about a debit spread. Okay, if I want to do a debit spread, the difference in the debit spread has to be, first of all, if I start with a debit spread, I'm not starting with a delta of 0.70. I'm starting with a delta of 0.50. Okay, so I'm starting right here. I didn't pick the strike price. The strike price picked me. All I did was go down here and went across. I didn't even know what the strike prices were. So when you're looking at an option, don't start at the strike price. Start at the delta. Okay. Number one, write this down. When I am looking at strike prices, I am going to start with the delta and then go towards the left to see what strike price it is. Don't go starting at the strike price. So start at delta, start right here, start at this option that has no liquidity. And if we were doing spreads, we would start here. So option just 0.70 delta, about 4 to 6 weeks out. Find one with the best liquidity, if you can find one with good liquidity. And here, XLU has good liquidity. Okay, XLU has good liquidity. At least it should have good liquidity. So you could do right here, XLU 42 days out, 0.70 delta right here. There's your option. Now, if you can do a good 0.70 option and there's good liquidity and the option's $2-3, you really don't need to be doing a debit spread. Okay. The only time you should be doing a debit spread is when the option is like $20, $30, when it's just, crazy money and has good liquidity. But let's say you're really tempted to do an option. Well, if you're really tempted to do an option, okay, you start with 0.50 delta. What's right here? Here's your 0.50 delta, okay? Here is the rule of thumb. There is no rule of thumb of what you should spread against your long. I gave you your long. The rule of thumb is you want to make sure that your debit spread is less than 50% of the premium that you're going to pay for that spread. And if not, you just move on. So to give you an example, let's look. This one doesn't have a bid. So let's say 47 through 48. What's the spread here? It's $1, right? 47 versus 48, $1. Okay. What does that tell us? It means we can't pay more than 50 cents. Well, what if the spread was from 47 to 49? What if it was $2? That means I can't pay more than $1. You can't pay more than 50 cents, more than 50%. If you're paying more than 50% of the spread, you're getting taken. That means it's a good credit spread, not a debit spread. Okay. So again, 0.50 delta for a debit spread, 0.70 for a regular option. You start with a 0.50 option, you go here, and then you simply do old-fashioned math. Let me give you an example. We already know here, we have 47.48. What's half of that? 50 cents. 139.93. How much am I paying here? I'm paying 49. I'm paying 39 cents here, less than 50 cents. Mazel tov, I'm good to go. Okay. Okay, let's say we don't like that spread. Let's say we want to do a 47 versus a 49. What's the difference between 47 and 49? It's $2. What's 50% of that? It's $1. Okay. What's $1.32? And what's this? 63 cents. What's $1.32 minus 63? It's somewhere around
70
70
cents or
cents.
so. Yeah.
Right. It's definitely less than $1, right? Well, you could do that spread. Now, does anybody not understand what I just went through and explained to you?
One question that came
Yes.
out there, Roger,
Yes.
is I think you said for the regular option, you're basically looking 4 to 6 weeks out. On a
Yes.
spread, you're just looking 1 to 2 weeks out, aren't you?
Yes. For a spread, I don't need a debit spread. I just want to keep rolling them over.
Yep.
Yes. Yeah. Now you could, if you want to, you could do a spread, 5, 6 weeks out, but I don't like to do that. I like to do a spread expiring in about 2 weeks, a week to 2 weeks. Yeah.
So
And
what I
so,
just did for everybody here, folks, I just gave you the thumbnail for the formula that Roger uses. And the thing is this, is that this is just not for seasonality trades. This is how Roger trades swing trades and day trades and debit spreads. It's the same formula.
yeah. And let me explain to you why. Let me explain to you why I don't have to go that far out. Let me explain to you why. So here's a spread that's 2 weeks out, right? Okay. Let's do the same example I gave you before. 47 through 48, right? So as long as it's below 50 cents, I could do this, right? How much is this spread going to cost me? It's going to cost me 40. It's going to cost me like 44 cents. That's pretty cheap. And you can make 100% here return. So I would rather spend 44 cents every 2 weeks and just keep rolling the trade over and just keep doing that as long as it's working, because I could make good money on the way out. You understand? Or how about 47 versus 49? 47 is 85 cents. 49 is 21 cents. So you're talking about 64 cents. Your profit potential is $2. That's 320% return possibility right there. So you see, the closer you are, so why do I do near close to expiration credit debit spreads? Because the out of the money options have more volatility. They're more speculative. So I get my debit paid for at a much better cost. My ratio is better. Okay. So to review once again, if I'm doing let me turn my fan on real quick one second. Okay. If I'm doing a debit, just a regular put, a call or a put, I'm going to go 4 to 6 weeks out, and I'm going to buy a 0.70 delta. Now, it doesn't have to be 0.70. It can be 0.68, 0.72, but in that ballpark, between 0.65 and 0.75, okay? Somewhere in that ballpark. If I'm doing a spread, a debit spread, which you guys can do very, very cheap, I would go 8 to 12, 8, 2 weeks out max. Why? Because the out of the money option that you're going to sell to cover the cost of your add the money option is going to offset your cost by a huge margin, because out of the money options expiring in a week or two tend to be more expensive because they are very speculative. So the formula for the entry is very, very simple. What is the difference between the option you're going to buy and the option you're going to sell? So if I'm going to buy a 47 and I'm going to sell a 49, that's $2. That means I can't pay more than $1. Let's say 47 versus 47.50. What's my spread here? 50 cents. What's my max I can pay? 25 cents.
Yep.
You see how simple? I think you guys are anybody who doesn't understand it is overthinking it. I want to spend at the most 50% difference of the spread between my long and my short option. Do you understand that? Mm-hmm. So, for example, if I buy a 47 and sell the 48, I can't spend more than 50 cents because the spread is $1. If I buy the 47 and sell the 49, I can't spend more than $1 because the spread is $2. If I buy the 47 and sell the 50, I can't spend more than $1.50 because the spread is $3. Okay.
Makes
You
good
guys
sense.
understand?
And Roger, when you were talking about the regular options, you said, hey, the first thing I look for is the 70% delta. I don't even look at the strike price. Now,
No,
when you're
no.
looking at a spread where you're looking for a delta at 50, is that a beginning point for you as well?
Yes. And then I go
50%.
to
Yep.
where that strike price is. Like that's
Yep.
how I got this 47 right here. I only know that that's where this 47 keeps coming back every time.
Perfect.
I do it right here. See that? That's how I did it. I don't even look here because I would have no point of reference looking at these strike prices. I don't know
Exactly.
where the stock is. The stock is at 365. Therefore, I'm going to look at the 365 call. I just go right here and look at my deltas. I want to show you guys something really interesting. I don't even know if my assistant noticed this. Look at my scanner. Have you noticed I don't even have the last price here of the stock? I don't even have the last price here. I don't even know what price the stock is trading at, and this is my scanner. That's how important I find the price of the stock to be. Okay? Okay. All right. All right.
Listen, I know we've got to move on, but there was a couple other quick questions I'd like to ask you. Roger, we
Yes.
were talking about utility stocks and their value, and somebody pointed out looking at SO and XLU on the daily, on the intraday there's a gap there. Does that gap concern you, or you're going, no, I just look at the daily. I'm not concerned about an intraday gap.
Oh, I'm looking at the daily. I'm not even looking at these charts. I wouldn't
Right.
even know what these charts. Yeah, I don't. When I'm looking at a daily chart and I'm swing trading, what's happening intraday means absolutely nothing to me.
Good point.
Remember, I'm trying to figure out if I want this stock. Once I figure out if I want this stock, then I'm going to go on the intraday chart and find out when I'm going to buy that stock. But the intraday chart is only going to answer the question of when, not if. If is decided. This will tell me if. This will just tell me when. Okay? All right. Any other questions before we proceed?
That was good. Somebody had asked a question about when would you consider a credit spread?
Okay, that's a good question. When I can't get 50%, when it's always over 50%, that's when the credit spreads are going to start popping. I'll be like, hey, screw the debit spread. I'm going to do a credit spread on this thing. Okay? Very, very important. Very, 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 very important.
So super good question. So
Yeah,
folks,
that's a
it's
good.
Roger. Yeah, and once again, thank you so much for everybody's participation here. I want to share with you that the VIP trade room, we're getting ready to close that and to move on to the next section. But if you would like to have a link to a copy of what Roger just presented, you can go to his YouTube channel. I've posted this in the chat, and you can see today's VIP session. Now, for those of you that are with us here on the YouTube channel, you need to come on over to the Zoom room because the balance of this presentation is going to be in the Zoom room because we're going to be doing a presentation and we're going to be giving you some offers and things of that nature, and YouTube does not allow us